Another sector we should focus on is the IT sector, which is, under pressure, and IT stocks have cracked as the top loser in terms of your sectoral indices. But is this an opportunity to buy or just the beginning and a part of a correction? Well, we have Rucha joining us to present both the sides of the story. Rucha, what do you have for us?
So definitely IT sector is down in the red about 3% Nifty IT, but let's look at the bull and the bear case over here. I'll start with discretionary demand. Well, I remember that in the last quarter, many of the IT company management talked about how discretionary demand is recovering and therefore clients are also increasing their spending. But remember, this was in the month of January. On the bear side, the higher inflation expectations which came out yesterday can actually hit the spending over here because it can decrease the room that the clients have to spend on these discretionary expenditure and therefore could affect the top line of the IT company as well. But moving on, let's look at how the sectoral or segmental vertical analysis indicate. Well, the bull case over here indicates that BFSI and the US segments are recovering, and this is what actually we saw in most of the IT companies. In fact, all of the IT companies in the last quarter. Remember that BFSI was actually very muted over the last couple of quarters, and this is the sector or this is the segment from which most of the IT companies get majority of their revenue from. But on the bear side, that the retail, healthcare and manufacturing, which accounts for also a significant portion of the IT company's revenue, are still under pressure. So a segmental analysis or vertical analysis is also giving us a mixed picture over here. But lastly, I want to talk about valuations, and this has been a peculiar point for most of the investors in this kind of a market, and this is very important for most of the IT companies which have run up in last 2 years. The bull case is that the top tier IT companies are attractive in terms of valuation, the likes of TCS, Infosys, Wipro. All these companies, the top tier IT companies are looking good in terms of valuations, but the mid cap companies valuations are really expensive because they have run up a lot in last 4 to 8 quarters, and this is a valuation picture. I'll first start with the top tier IT companies over here. TCS, I'll compare FY26 PE versus the 5-year average. TCS trading lower, Infosys trading almost at par. HCLT is a kind of exception over here because this was one of the top performers, and that is why it is trading above 5-year average. But again, Wipro and Tech Mahindra as well, almost near to its 5-year average is what we could see over here. But also, let's move on to the next slide and compare what our mid caps doing over here. LTI Mindtree, 27.2 versus 32.6. This is again a top tier company, but Coforge, look at the kind of valuations, 36.3 versus 34.3, higher than the 5-year average over here. Emphasis largely around LTTS. It is an underperformer because the ER&D space didn't do much well, and Persistent System. Look at the FY26P, 50 times versus a 5-year average of 39 times. So mid-cap IT is really bad or expensive in terms of valuations, and top-tier IT companies looking decent enough, but I would say better than the mid-cap IT companies. So this is the overall picture of the bull and bear case for the IT sector.
Well, thank you, Rucha, for giving us that extensive link on the Nifty IT index. Gaurav, coming to you first. The Nifty IT index is the top sectoral loser in trade. The index has fallen below its 200 DMA and also broken the crucial 40,000 level. How are you looking at the Nifty IT index on charts?
See, if you look at the Nifty IT on a daily or the weekly charts, and there's a triangle pattern breakout that we witnessed in early part of July last year. Since then, we have seen the IT index trading above this breakout area. Even if it falls another 2 or 3%, I think that is a time when it will make a retest of the breakout. And at that point, I would be more interested in buying many of the IT names, whether mid-cap or large-cap names. But at this point in time, I would not call this a negative one. For me, it is becoming more and more lucrative. On daily charts, yes, your indices is trading below the 200 EMA, but so are many of the stocks. But for me, what is more important is the triangle breakout retest, which is going to make it extremely lucrative going forward. It has been an outperforming sector for a while now. And if it sustains above the breakout area, I think it will come back to the good books of buyers in a short period of time.